as vegetables are concerned, which was, not even a worry. A downside was expected. Cereals, the upside fears have not come through, so that's a positive. Other things, oils, edible oils are down 2.8% on the month. That's on expected lines. Last year, around this time, we still were seeing the tail end of the Ukraine war impact. It was after a surge in May that you started oilseeds prices falling a bit. But now we have a comfortable Rabi crop, and therefore month on month there is an oils and fats decline by a good 2.8%. That's very important to bring down the food index as well. The housing index is up 0.2% on the month. That is something we should watch out for because that's a part of the core index. And clothing and footwear is also up 0.3% on the month. Not a very big number, 0.2 and 0.3. Till 0.5, we can take it with both hands. But it's important to note that these are not declining. The miscellaneous index, which is usually services, is up only 0.3% on the month. So I don't think the core index would have gone up much. Even if it does, it's more because of base effect and not because prices have gone up terribly. Okay, we now, I guess, have the details of every product in terms of annual rise. Now I'm giving you the annual increase. Cereals are up 12.6% year on year. Meat and fish minus 1.29. Egg up 6.7. Milk products up 8.9. It was 8.9 last month also. So there hasn't been a terrible month-on-month increase. That's important. Oils and fats are down 16% on the year. Like I told you, last year was impacted by the Ukraine war. Fruit is just hardly up, flat actually. Then vegetables are down 8% year on year. But as I told you, month on month, they're up 3%, 3.3, which is really a seasonal factor. Pulses are up 6.5% year on year. And sugar is up 2.5% year on year. Those are the important ones. Then coming to the year on year figures for services, the miscellaneous number, which closely represents services, are up 4.84%. So my sense is the core number is not going to come very significant. On the street, I got a poll of about 5.2, but let's wait and see what it comes at. That's as far as the CPI is concerned. In a minute, I should be able to give you the IIP number as well. Like I told you, it's a very good number of 4.2% against the average I got of 1.3. Electricity has not done too well. It's minus 1.1. But manufacturing has done very well, rising at 4.9%. That's the strong point. And manufacturing is actually 80% or almost 80% of the entire IIP basket. Mining has come in decent at 5.1%. Capital goods has done very well, expectedly so, 6.2% higher. Primary goods only 1.9. I'm just waiting for the consumer durables and non-durables, which are reasonably significant, especially from a stock market point of view as well, and to assess the impact of personal consumption or demand. I think, just a minute, we've got the consumer goods. Okay, consumer non-durables has done well at 10.7, but consumer durables, I think, has not done too well. With consumer durables is minus 3.5. So consumer, I don't know how much to take these numbers. Actually, we saw good car sales and two-wheeler sales. So anyway, the consumer non-durables has done well, but consumer durables has fallen 3.5%. But all told, good industrial output numbers. I mean, what more can you ask for? Growth is better than expected and inflation lower than feared at 4.25%. So I would think a very good set of numbers, but let me defer to the experts. Rupa, Rege, Nitsure, Chief Economist at L&T Financial Services is with us. We will have more economists joining us. Okay, we have with us Nikhil Gupta of Motilal Oswal, Indranil of Yes Bank, and R. Sivakumar to give us the debt market perspective. He's from Access Asset Management Company. Rupa, your thoughts first on inflation?
Well, it's a good positive surprise. And in May, all of us had expected it to decelerate significantly. But the food price inflation deceleration is very high, which is encouraging. Only thing, this data is for the month of May, and we are seeing now in June sequentially prices of wheat, rice, everything firming up. So I think RBI's cautious stance gets vindicated by today's growth and inflation mix.
Okay. I think the last time we had a 4.25 or a sub 4.25 number is April of 2021. So that makes it 25-month low. That's a very pleasing state of affairs, a 25-month low in terms of the CPI headline number. Now, Rupa, would you want to change your full year number, 4.25, if it is lower than your expectation?
No, given the uncertainties, especially, El Nino risk, etc., and also, I mean, there is some inflationary risk associated with rupee depreciation also.
Yeah.
So I think second half of the current financial year, we are going to see some firming up of inflation.
Okay.
So this, today's benign reading may get more than offset by that.
Yes, yes. I mean, that's the message we got even from the Australian and the Canadian central banks. They are not fooled by the inflation numbers that are currently softening, but are expecting, since growth is strong in all economies, a fear of higher inflation is very much there. And I think the Reserve Bank was also on the same page. Indranil, 4.25, better than you thought?
Marginally, our estimate was 431. Most of the numbers that you read out were in line with what we had been expecting. Now, coming out of what we analyze of this inflation, yes, it's a good number. But having said that, I think a month-on-month increase of vegetables at 3% doesn't really match up to the real-time numbers that we had been tracking, which was up on a month-on-month basis by around 8%. So going forward, I think a lot of factors is likely to play on inflation, while the global situation seems to be more or less in order, and that should bring down the goods inflation. I think services inflation domestically, especially from healthcare and education, all these are on the relatively higher side, and they are relatively quite sticky. Obviously, the risk that even Rupa pointed out is with respect to the forecasts of the monsoon and how the monsoon plays out, more in terms of the spatial and the intertemporal dispersion of the monsoon. And I think, if I am not mistaken, the IMD does point out relatively lower monsoon for the rice producing belt, which is something that we need to track very carefully, even understanding that food stocks in India is relatively not a problem at this point.
Okay. We had the IMD and SkyMet on the channel today, and their analysis is, at the moment, is that peninsular India will not be impacted. They're expecting a normal monsoon, as well the northeast. The worries are about northwest and central India as well, where it could be below normal, and that is the grain bowl, northwest, and central India is not really endowed with irrigation. Those were the observations they made. We may have to worry about that. So yes, no one's changing the inflation number. Nikhil, your number and any changes? 4.25.
Hi, Latha. Yes, so it is slightly better than what we were expecting. We were close to 4.5%. But we do not change full year numbers. The one thing that I want to mention, which is in contrast to other participants, is we believe that there is a high probability that we could see global slowdown in the second half of this year. That is by end of CY23 or early CY24. And if that happens, then probably the upside risks that we have to inflation, what I'm highlighting is probably we will not see higher inflation, but inflation could stay around 4.5%.
Okay.
So we are not changing our forecast.
Okay.
We still believe that for the full year FY24, CPI inflation could be closer to 4.5%.
Okay. As a person who was witness in the room where the monetary policy statement was read out and discussed, I can tell you the Reserve Bank is quite uncomfortable with that 5.2 forecast they have for the fourth quarter. There is a fear that inflation is going to, persist, and the determination that they want to see 4 point something for a reasonable period of time was exuding in that conference hall. So, our questions on will there be a cut was so scoffed at that, I just want to carry that message that they do want to see a 4 point something number for a period of time before they can think of cutting. That was the message. So 4.25 will warm their hearts, but their own forecast is 5.2 for the last quarter. So until this, I guess by the time we come to next quarter, this 4 decimal will go away and it's going to become 5 because of the base effect. The base runs out by the time we come to September. So we'll again start getting a 5 number. So Sivakumar, what about the bond? People have been losing out on bonds in the last couple of weeks. Do you think that there is anything now to buy in the bond markets? Any positive reaction? Yeah.
Yeah, I think it's roughly in line while we think of, these 5, 10, 15 basis points beats, etc. Really speaking, market expectations was around 4.3. So we should not see significant market reaction on this print. But I think the important point is something that you raised just now, which is where will inflation be by the end of this year? And when you look at this print and the last couple of prints, it does suggest that the momentum of inflation, that is the seasonally adjusted annual rate of inflation, may have actually dropped below 5. And that will be huge if it holds up for the rest of the year, which means that by the time we get to the fourth quarter, remember that the base effects will play out. And if momentum of inflation remains here for the next 3 or 4 quarters, then we should probably be at 5 or even below if we are really lucky by the end of this year. Now, of course, there are a lot of other things which come into play. The increases in MSP of paddy, etc., is not going to play good with that forecast. So let's wait and see how that plays out. But I think on the whole, this is a good print. We should celebrate it. I think we have had too many years where this whole 11% of nominal GDP, 6.5 inflation, and 4.5 real. Hopefully, we can flip that around and make it, even if it is 4 or 4.5 or 5% inflation and growth outbeating inflation finally, right after about 3 or 4 years.
Fair
I think
point.
this is.
No, I completely take your point that we should be celebrating that even today, like we were celebrating even last month with GDP and inflation, surprising in the correct direction. The delta on growth is higher, the delta on inflation is lower, and you can't ask for more. That brings us to the IIP number. There are 2 positives actually. The April IIP coming in at 4.5, is it? Or 4.2? I just forgot. 4.5 is better than the 1.3, so far better than the 1.3 that our poll threw up. But more importantly, the March IIP also has been upped from 1.1 earlier to 1.7. So while we were all ruining the slowdown in March, it's not as bad as we thought, which is important. I must add the point that, all over the world, we are seeing the growth numbers surprise on the upside. We saw it in the US jobs data. The Canadian central bank statement was also that the first quarter GDP growth in that country had come in far better than expected. So growth is actually surprising on the upside in several quarters of the world, maybe not so much in the United States GDP, but certainly in labor data. And we are keeping in step. Growth numbers, Rupa, any thoughts?
Growth numbers are aligned with our expectations, and I have been telling you in this show that I was seeing a steady improvement in rural belts throughout FY23, and luckily it has continued now also because of healthy Rabi crop. So higher growth of consumer non-durables on a sustained basis, it shows, it reflects that reality that rural belts are doing well. And this is also seen in the fourth quarter results of FMCG companies, which is a good thing. That means agriculture and rural belts are entering El Nino year with better cushion. We have good reservoir levels, good income levels. Even rural wage levels are quite satisfactory. So the blow of El Nino, if at all it happens, will be relatively lesser. That's what I feel.
Okay. Well, there were some FMCG experts who said that the industry is actually not seen a very good rural uptake. If I remember right, the numbers they quoted was FY23, volume was minus 4%, but price was plus 12%, so the overall revenues was plus 8%, but volume was minus 4. Volume had become flat by the fourth quarter, they admitted, but that was because urban was growing and compensating for rural. The rural number he gave, like a very current number, was rural is still contracting 3%, while urban is growing 3%. So those were his industry numbers, not his company's numbers. But this is very happy data that consumer non-durables has done well. Indranil, 4.2 industrial growth number. Is there anything, is that a positive surprise?
For us, yes, it's a huge positive surprise. But having said that, we still see the seasonal effect playing out, whereby April index is lower than the previous month index. But yes, it's a positive surprise for us. But the next question that you might ask, whether this enables us to do anything in terms of the GDP forecasted number, I think too early. Okay. Immediately, obviously, we are not changing the numbers.
Where are you at now? What's the GDP?
We are at 6.1 now, and we would like to retain 6.1 for now, okay, before we see more significant signs of growth panning out. Okay. Now, the one point within the GDP that continues to concern us is the private consumption number.
Yes.
And there is some sort of a mismatch that we see in terms of the manufacturing number that comes out through the GDP, especially for the fourth quarter, and the private consumption pull that we see for the similar period. So these are some of the issues and factors that we need to watch out to understand what is the GDP number that finally comes out, and what is the extent of slowdown that we need to factor in out of the slowdown of the rest of the world.
Okay. Yeah, I agree, that's important. There is a bit of a mismatch when you look at the manufacturing, but who knows if this is a brief positive. We have to see. I think on 15th we will get the import-export data, and by the end of the year by the end of the month we should get the BOP numbers for the full year. So we will have the services number as well for the full year. Maybe we will have some idea of how the external sector is doing. The import-export data for April itself was very weak. So that was one of the reasons why economists were telling me that the April industrial output may not look very good, but it's done well. Nikhil, anything to add in the industrial output data? Does it look a little more encouraging than you thought?
Yes, Latha, definitely. We were expecting close to 2%, and 4% is definitely a good reading to go at. But I just want to highlight one thing here, which we did not touch upon, is that even if, we have recently upgraded our real GDP growth forecast to 5.6%. Okay. We were expecting earlier 5.2, but with better than expected Q4 and resilience in April as well. We believe that there will be definitely upgrade, and we have upgraded it to 5.6. But what I want to highlight is that even if it turns out to be 6% for the year, FY24, what we are missing is that nominal GDP growth is likely to be very low because of massive decline that we are seeing in WPI in Q1, which we believe for the full year as well, WPI is expected to be very low. Our forecast is close to 1%. I think market consensus is still close to 2.5% to 3%. But what I'm trying to say here is that even if real GDP surprises on the upside, our forecasts, nominal GDP growth, we are predicting it at close to 8%, and the market consensus is somewhere close to 9.5 or so.
Yeah.
Single-digit nominal GDP growth is something to be very wary of. I understand there was a base effect in FY21, FY22, but this is something that I wanted to highlight on this platform.
Yeah, I think what was the government working with? I think they were working with 11%, right?
10.5.
Yeah. 10.5, okay, from 271 trillion to 301.7 trillion or thereabouts. So they were working with 10.5. Yeah, it could, if it falls short because of WPI, perhaps it's not terrible, but it's not a very good sign for other nominal rates like EPS growth. That seems to be the sum and substance. If you can just give me all your GDP numbers and if there are any recent updates, Rupa.
No, I'm expecting GDP for FY24 in the close neighborhood of 6%.
6%. Okay.
Yes.
Nikhil, yours was 5.6, right?
Now 5.6, yes.
Okay. And Indranil, you're at 6.1.
Yes, we are at 6.1.
Okay. Quite clearly a far cry from where the Reserve Bank stands firm. at 6.5%. And the chief economic advisor stood with 6.5 when he spoke to me, but his latest speeches, he's willing to go for an upside surprise all the way from 6.5 to 7. But let's see how things pan out. Last word from you, Siva, what kind of a 10-year band we should be looking at now?
I think in the very near term, since the CPI is out of the game, we should expect relative stability. There should not be anything surprises. Of course, the key event is the Fed this week. So that's going to be, driving the narrative in the very near term. And the market expectation is for a skip, which is the new pause, right?
Yes, yes.
And the important thing here is the governor also alluded to this whole RBA and Bank of Canada rate hikes after a pause. So this is something to keep in mind, that even if all central banks are on pause mode, it doesn't automatically mean that the next is a pause, right? So it's something to just keep in mind. I think bond markets will be watching all incoming data very, very closely to see where, and especially the inflation numbers in the Western economies are going to be critical in determining where rates even in India go.
Okay. Fair. Actually, that's very welcome caution that you have put on the table. The word pause is now gotten a bad meaning. It's getting edged out from central bank vocabulary, and it is getting replaced by skip, which means we did not pause. We just skipped one session, and we will be back with hikes. That is the meaning that's being given to central bank jargon. And already 2 central bankers have done that. It's not a pause, it was a skip, the last meeting, and we are coming back with hikes. That was Australia and Canada for you. So the strong message that came from the Reserve Bank also was the way they scoffed at any questions on cut. That should be taken on board, but maybe hike is not in our trajectory for sure, not with this kind of a number. Thank you very much, Rupa, Nikhil, Indranil Pan and Sivakumar for joining us and giving us your color on the CPI numbers. I just wanted to add that the core CPI has come in at 5%, and that's extremely positive. Core was something the Reserve Bank was worried about. My poll said that core may come in higher than last month's 5.2, but it's come in at 5%, lower than last month, lower than April. That is important because core tends to stick. It's a little enduring. And therefore, this is a very happy set of numbers. Inflation lower than expected, growth better than expected. On that positive note, we wrap up on this special State of the Economy edition. We request you to stay on. There's lots news and views waiting for you after the break.